A quiet meeting room in Washington turned into a geopolitical pressure chamber on April 11th, when US officials tabled a draft deal demanding control over a key Russian gas pipeline running through Ukraine. A clause sources reportedly found buried like an Easter egg in the agreement. According to Reuters, the provision blindsided the Ukrainian delegation, already on edge over what insiders described as Washington's increasingly aggressive demands, far beyond the scope of prior negotiations. The pipeline, previously operated by Gazprom and a backbone of Europe's energy supply, had stopped transporting Russian gas on New Year's Day. Ukraine had refused to renew the decades-old transit agreement, effectively shutting off a route that once delivered vital fuel to EU nations. The shutdown sent shockwaves through the European market. Slovakia is now losing more than $200 million annually in lost transit fees, while Hungary accused Kyiv of worsening Europe's economic strain, blaming the halt for a 20% surge in natural gas prices. What truly escalated tensions was Washington's push to place the pipeline under the control of the U.S. International Development Finance Corporation, a government agency under the guise of an EU-aligned oversight structure. The clause, nested within a broader proposal on Ukraine's mineral wealth, infuriated not only Kyiv, but also several EU capitals caught in the political and economic fallout of Ukraine's standoff with Moscow. Reuters reported that talks on April 11th were marred by a hostile atmosphere, with Ukrainian officials taken aback by the sheer breadth of US demands, none of which included the security guarantees Kyiv has long sought amid Russia's ongoing occupation of 20% of its territory. One particularly contentious element was Washington's bid for privileged access to Ukraine's vast mineral reserves, demanding that all revenues, public and private, be funneled into a joint investment fund under shared oversight. A Treasury Department spokesperson confirmed the discussions, framing them as technical in nature, though sources close to the talks described a far more confrontational dynamic. The negotiating environment is very antagonistic, one source told Reuters. To navigate the proposal, Ukraine has brought in the US law firm Hogan Lovells as outside legal counsel. President Zelensky, for his part, emphasized that any minerals deal must be profitable for both countries and contribute to Ukraine's modernization, a clear signal of resistance to one-sided terms. As Kyiv stares down both Moscow's battlefield pressure and Washington's boardroom leverage, the stakes have never been higher. Europe's gas crisis is deepening, Ukraine's sovereignty feels increasingly up for negotiation, and America's push for control now risks alienating not just adversaries, but allies too.